means that I'm going to bring 3 at 3 Thunder right now, because that's what I do. Every business day at 3 p.m., I bring you what our algorithm has picked out as unusual option activity. And as I bring it to you, this is basically something that we have created over the last 20 years, folks. The heat seeker algorithm to find this unusual activity. And then we curate it so we don't just put out everything that we see. I see a lot of our competitors out there that put out all kinds of stuff that wouldn't meet our criteria. Now, some of them will be right occasionally, but a lot of them get you into stuff that's not really so right. I think our hit rate is much higher than most, and the reason for that is it's curated. It's not just the algorithm. But let's get to that, and let's let you decide for yourself as well. So this is 3 at 3 for the 11th of January 2021. Delighted to have you here with us. What you need to know is that this disclaimer states that this is for educational and informational purposes only. Full stop. That's it. All investments involve risk. You guys need to determine what's appropriate for you. Intellectual property. Yes, we have copyrighted material for what you're about to see. Of course we do, because here it is in print form right on the screen here. That's copyright. Also, we have patents, trademarks, registered marks. We have all 4 of those. We are happy to share, which is why I'm doing this free, gratis, as the Latin terminology would say. But we'd like you to ask us before you reproduce it in any form. And please cite Market Rebellion as the source of the information. Thank you. Let's get to that unusual option activity, or UOA, shall we, folks? Yeah, let's get to it right now. Urban Outfitters, URBN. So these guys, Anthropology, Urban Outfitters, and so forth, as you see, just before 2 o'clock Eastern time, so about an hour ago, because we're operating on Eastern time, of course. That's why we call it 3 at 3 Eastern. We see bullish activity, 11,200 Feb 29 calls. For those of you who are new, 11,200 is 1.1 million share equivalent. How do I know that? Because every option, unless otherwise stated, is for 100 shares of stock. So when I say 11,000, that means 1.1 million. That's worth following. That's what we think anyway. They were bought for $1.75. Again, since every option is for 100 shares, that means it's $175 per option. For one contract would cost you $175. If you were simulating 1,000 shares, that would be 10 contracts. 10 times 100 is 1,000, of course. So 10 contracts would cost you $1,750 plus commission wherever you're trading. That would be your total risk of owning these options. $1,175 on that 10 contract trade. I trade a little larger than that, but that doesn't make me better than anybody out there. That just means I've been doing this for 39 years, so I'm kind of used to what I have to do to make a living at this. And since I've been doing it, I have a little more confidence. If you're just starting out, there's nothing wrong with paper trading it, folks. I'm not encouraging any of you to jump into this unless you understand what you're doing. All right, that said, they have earnings due the 2nd of March. These options do not encompass that time frame. These options only go till the end of February. So unless somebody knows that the earnings report is going to be moved up, these will not be part of that. But an out-of-the-money call, as you know, I like buying at the monies, so I didn't just buy these blindly. But nonetheless, I do a lot of those one-to-one bull call spreads. In particular, I do that in the final 6 or 8 weeks of the option's life, because I have found over time that I will be a bigger winner by doing it that way. That's why I do it. All right, let's take a look at the chart. There is a chart that shows you for the last 5 days, just taken right there from Yahoo Finance 15 minutes ago. You see that The middle area there might be 25.34 and the high end 28.03. That to us is somebody betting bullishly that the stock breaks to the upside out of this range. If you'd like to learn more about doing one-to-one bull call spreads, about doing calendar spreads where you sell the short-term front month and buy the next month out, or vice versa. If you'd like to learn more about calendar spreads, iron butterflies, iron condors, vertical spreads, you can learn all of that at marketrebellion.com/get started. You can also learn about cryptocurrencies, which I would strongly encourage you to learn about before you trade those. It's been a fabulous ride in the digital asset space, but again, there are strategies you could use right over there at the CME. You could use some of those strategies to hedge your Bitcoin exposure. There are online areas as well, but you need to decide before you jump if you understand the product. We can help you understand the product. Go over to marketrebellion.com/get started. All right, second of our 3 at 3 is XLE. So the XLE today, this is energy, of course. Bullish call spread. The XLE was at 42.15 and somebody bought 35,000. That's a big trade of the February 45 calls. They bought those for $1.05, which is $105 per option. And they sold the same number, 35,000 of the February 48 calls. So in doing that, they've done exactly what I've described for you. They've done a one-to-one call vertical spread. They own the right to take it at 45. They have collected a credit for selling the 48s. Net out of pocket on this trade is basically give or take 60 cents. So that means $60 per spread for something that could go to $300. Again, a $3 call spread, you have to move that decimal point, and that becomes $300 per spread is the maximum profit that you could achieve at expiration if the stock, or in this case ETF, the spider, is higher than 48. So they own the right to take it at 45. They have sold the right for somebody else to take it from them at 48. I bought closer to the money as always because that is my modus operandi. Every once in a while I'll do something like this and trade those out of the monies, but I prefer to be at the money. Again, you have to decide what's appropriate for you. I'm putting a larger amount of money at risk because, for instance, if I did this spread, I wouldn't be putting it on for $60. I wouldn't be putting it on for $600, which would be a 10 lot. I'd be putting it on for 6,000, which is a 100 lot. Again, I'm not bragging. I'm not trying to say, oh, John's so smart and John's so big. No, but in order to have a meaningful impact to my trades, I can't trade 6 lots and 10 lots and so forth. I need to be 100 lot to 500 lot size to make sense for my portfolio. Again, not intending that to sound braggadocious. Here is the XLE, as you see, just shy of 42. Again, they're buying the 45s, selling the 48s. That's why I like buying the 42s and selling higher strikes against that, 1-to-1. Voyager, can't say enough nice things about Steve Ehrlich and the team over at Voyager. Steve is the CEO. Voyager is a publicly traded company out of Canada. They trade over the counter here in the United States as well, so you could own it in Canadian dollars up there on their venture exchange, or you can trade it OTC here. I'm not telling you to buy or sell the stock. I'm saying I love dealing with the company because they pay you a high rate of return for your Bitcoin if you choose to leave it there. They have 50 digital assets on the platform that you can trade commission-free. It is indeed crypto made simple. It's right there on my phone, so you can figure out if you want to buy, if you want to sell, if you want to leave it there and get that nice interest on your money. It's a lot nicer than just having it on a Tracer elsewhere when you can collect something close to 9 or 10%. That's another reason I like Voyager. By the way, I just saw in their press release that their assets on the platform have now skyrocketed to $350 million. So this is a real company, folks, worth checking out. Here is the next one, Pins or Pinterest. Pins, I see bullish call buying. Stock 72.60. They're buying the 73 calls. Is that an out of the money? Yeah, by that much. I bought the 73 calls. January 73 calls. They were purchased for $1.35 up to $1.99, which means $135 up to $199. That's how much they paid for these options. Bought 6,700 of them. So this is a this is $1 million trade, folks. I want you to be aware of that somebody has plunked down a cool mill on this trade. January 73's Pinterest. These options expire in the very near future. So you need to be aware of that one-to-one call spread as some way to cut down the time decay that otherwise impacts your trading and can be a big negative if you don't address that. That's known as volatility compression and or theta, which is time decay. You need to be aware of both. Bang. There's the graph that shows us the stock right now at 72.60. Again, it was 72.60 also when we noted this activity. All right, this has fast become a favorite part of 3 at 3. You send me your questions at Jon Najarian. That's my Twitter handle, at JONNAJARIAN. That's for those of you listening on Sirius Satellite Radio. Or you could also send the questions to at the number 3 _ UOA. Let's get to those questions, shall we? Call spreads. Trey Sheehan, which is his handle, I believe. That would be a gentleman's name. TREYSHEEHAN, the number 3. All right, Trey, let's see. My account is like boom, boom, boom following your trades this year. Love to hear that, Trey. Thank you. Thanks for all your help. One question I have is you say you use call spreads on most of your trades. Why do you do that if it limits your upside if the stock gets bought out? Thanks. Reason is, Trey, that probably, 1 out of 20 of these end up being something being bought out. So I'm not so much worried about that home run that I could hit if it was bought out. I'd love that to happen. And at times I do let these calls just sit there in the hopes of M&A or mergers and acquisitions activity. However, I am a guy who wants to hit for singles and doubles. I figure if I'm at the plate every day swinging, I want to be swinging for singles and doubles. I don't need to be a home run hitter. That's why, as I said, if I'm putting $6,000 to $10,000 on each and every one of these trades, I want those to be singles and doubles. By a single or a double, if I end up, putting $6,000 down and I turn it into $12,000, pull half that money off the table, let the rest run. That's the way I like to play it, Trey. So I'm definitely in a risk mitigation and defining my risk, as well as being disciplined about profits and disciplined about losses. That's what'll keep you at the tables longer. Thank you, Trey. Neo. All right. Chris Giatu. That's an interesting name, Chris, just like mine, Najarian. I'm sure it's probably just as hard for you to pronounce my last name, but let's give his handle, which is at Pana, P-A-N-A _CHRIS. Much easier. Thoughts on NEO following their consumer event? Are you still holding your calls, buying more? I am still holding calls in NEO. I love it. I think this is a stock that could go considerably higher. They're already talking about the U.S. market. This is, of course, a Chinese EV, electronic vehicle. I love what they're doing. It's not my only exposure into China and EVs. I have owned this one. I have owned Li, Li. I have owned XPEV. I, of course, own Tesla and have written calls aggressively against it. I like what all of these guys are doing, and I'm on the board of a company that will be able to make an announcement soon about an EV that we are working with. Thank you. Let's talk about big tech, shall we? This is Martin van Nordstrand, which is at From the Clinic. That's FROMTHECLINIC. He says, thoughts on big tech stocks in 2021 in the face of free speech question marks. Well, I think the big tech stocks all thrive going forward, but I think they are faced with some real questions about, for instance, Parler. I don't know how that's not antitrust to basically kick them off of a number of these platforms. I don't know how that isn't. I mean, when you're talking about shutting down your competition, that kind of seems like antitrust to me. So I think there will be some discussions. Some of those discussions could lead to volatility in that space. You've already seen that big sell-off and then tried to make a comeback in Twitter. I think Facebook, Google, and Amazon all have issues that they're going to have to deal with regarding free speech. Make speech free again seems to be trending on the internet, and I know why, and I think you do too. So I think big tech survives and thrives, but I think that they'll have to get through some of this and perhaps change a little of the way that they've addressed an issue like Parler in particular. Nike. Hi, John. Are you still holding the Apple Nike 145 calls? Are you adding to these? This comes to us from a gentleman in Dallas by the name of Ken, and his handle is Ken Hurd, HURD _ Dallas, DALLAS. Well, Ken, yes, I still have Nike calls. I definitely am a big fan of what they do. Let me see here, Ken, just getting a fill. The stock, Nike, has made a nice move. And let's see here, NKE has moved up from that, 141-ish level, I think, when Pete cited the unusual activity last week. We will look at taking off more as this rally continues, Ken. But did I add to it? No, did not add to it. But I do have a substantial amount of calls, and it's working out nicely. I hope it's working out for you, Ken. Thank you. If you would like to, folks, learn more about unusual option activity, please go to marketrebellion.com/UOA. That is marketrebellion.com/UOA, which is where we get unusual option activity. We can show you how we do it. We can talk about why we do it and how the algorithm works. And you can subscribe by going to marketrebellion.com/UOA. Thank you for joining me today, folks. I'll be on the halftime report. Please tune into that tomorrow. It's a pleasure being on here with you. I encourage you to go to youtube.com and on their search bar, type Market Rebellion. You can subscribe to our YouTube channel there. It's a pleasure to be with you each and every day, and I would encourage